There are inherent limitations in auditing whereby the auditor is unable to obtain the absolute assurance that the financial statements are free from material misstatement due to fraud or error. So one of the inherent limitations is what is the nature of audit procedures. See, audit procedures, they are the means to obtain the audit evidence. Sometimes what happens, the auditor is unable to obtain the audit evidence in spite of applying the audit procedures. So audit procedures could be risk assessment procedure, could be further audit procedures. So basically what happens if the auditor designs and performs audit procedures to obtain sufficient and appropriate audit evidence. So now what happens, there are sometimes practical and legal limitations in obtaining the audit evidence. There are some limitations. Say example, say auditor may not be able to check all the transactions and balances. He may not be able to check because of high volume of transaction. He may go for what you can say samples, and while sampling, what happens, he will not be able to check all the transaction. Now this will become a practical limitation on the auditor's ability to obtain the audit evidence. Similarly, there are what you can say, take example, the management may not provide complete information as requested by auditor. Whatever information I have requested, they are not given me a complete information. That's the thing here. So now in such case, the auditor cannot force the management. I cannot force the management that okay, you give me complete information. I cannot force them actually here. And in such case, what happened here, I can just give a report. I cannot force the management, okay, give me all the evidences. It is not an investigation. So here there is a legal limitation on the auditor's ability to obtain the audit evidence. That's a thing here. So sometimes management will be made of dishonest people, unscrupulous people. Unscrupulous means who are scheming people. They always keep on doing some schemes. So they are involved in fraud. And fraud involves sophisticated and carefully organized scheme to conceal its existence. It cannot be detected by auditors so easily. So now these people, they may produce fabricated document like fabricated bank statement, fabricated purchase invoices. They may submit fabricated document which make the auditor believe that the audit evidence is valid. That's the thing here. But the document will be fake, it will not be genuine. All these things are there. And we are not an expert in authentication of document. We, as an auditor, I am not an expert to authenticate the document. That is the thing here. So this is one challenge of being the auditor. Further, what happens here, there may be some related party transactions actually. Related party transactions, what has happened, they would have entered into a transaction with the related party only on the paper, but the transaction would have not been there. Say example, I will say I purchased the goods from the relative, but there is no movement of inventory. So in such case, auditor may not be aware of related party relationships, related party transactions. What is the wrongdoing in the transactions? He may not be aware. The auditor may not be aware of such wrongdoing in the transaction. And that is why here, as the nature of audit procedures, you have to be very, very careful that sometimes in spite of applying audit procedures, I may not get the audit evidence. So that is why it's an inherent limitation of auditing, okay, whereby auditor is not able to obtain an absolute assurance. See, I apply audit procedures to obtain audit evidence. If I'm not able to obtain audit evidence, what is the use? What is the use of it then? Okay, so that is why this is very much important.